Assalamu alaikum and a very good day to all viewers out there. Today we are going to discuss question from FAR210, topic 3, Mfrs 116, property, plant and equipment. And we are going to discuss the final assessment question, question 2, July 2020, that is from the on open distance learning. Okay, let's start. I hope you have the question with you. So let's read the question together. Rina Berhad is a trading company in Pulau Pangkor, right? It's a company in Pulau Pangkor. And they focus on selling tableware, for example. Selling tableware. They are selling Corel, Luminac, Noritake, and several others. And the selling of tableware is actually the principal activities of the company. Right. Let's look at the next sentence. The current shop is small. So since the current shop is small, so what they decide to do is they might not be able to meet the increasing demand. So to meet the increasing demand for what? Demand for the tableware of the products. The products are the tablewares. The company decided to purchase a new building. So this is the decision to purchase a new building. And the price of the building is 3.8 million. So this 3.8 million is just the purchase price. And you are also offered a rebate of 2%. So a rebate of 2% is normally deducted from the purchase price. So this one you will need to deduct. Right? This one is actually part of the purchase price, but it will have to be deducted from the purchase price. So we assume the rebate is given. Remaining costs incurred are as follows. So legal fees are directly attributable costs. Stamp duty, these are also directly attributable costs, since this is normally needed to have the building, in terms of the sales and purchase agreement. So you need stamp duty. Admin costs are actually expense, and these are the expense that will be excluded. Excluded from where? From the calculation of initial cost. You'll be asked to calculate initial cost. And then painting of the new building. So painting of the new building is actually necessary to prepare the building for its intended working condition. So this will be part of directly attributable cost. And whatever directly attributable cost is whatever that you will include in your initial costs. Okay. The process of purchase completed on 30th of April, right? So 30th of April, and immediately after that, the new building are ready. The building is ready for its trading operation. So meaning to say that this is the date of acquisition, because this is the date that the building has been prepared for its intended working condition. The company decided to provide depreciation. So these are information on depreciation. So information on depreciation, I'll use a different color. So the depreciation on the building, where you have 5% per annum on cost. On cost means this is going to use straight line method, but be careful. Under straight line method, you are going to depreciate based on depreciable costs. What is depreciable cost? We'll see that later. And yearly basis. Yearly basis also we'll see later, but that means the depreciation will be charged regardless when is the date of purchase, even though not equal to 1 year. So it will be charged for full year. You expect to use the machine for the next 20 years. So building is expected to be used for the next 20 years. So that is the estimated useful life. And the account of the company is closed on 30th of June each year. and 30th of June, and each year here would refer to the first year would be 30th of June if it's for the first year, 30th of June 2018. On December 2019, this would refer to the following year. New status of the island has increased, right? So they have declared that to be a duty-free zone somewhere in December. And the value of the properties in Pangko has also increased. So the building was revalued, not in the year that you acquired, but a year later, right? It was revalued to its fair value of 6.2 million. So 6.2 is the fair value on the date of revaluation. That is done on 30th of June. So the revaluation was done on 30th of June. The directors decided to integrate the new value into its account. So meaning that directors decided to use the so-called Revaluation Model. Okay, these are the information, right? So let's see what is required from you. Okay, this is the first part of the question. Yeah, briefly explain whether the building that you decide, or the building that were bought earlier, whether that building is an asset of Reena Berhad. Remember, the company is Reena Berhad. So you have to decide whether is it an asset, which is on the identification of whether there is an asset, whether the building is an asset in line with the conceptual framework for financial reporting. So let us first revise what are the elements of asset, or what constitute the definition of asset. So asset, if you can still recall, is a present economic resources controlled by the entity, controlled by Reena Berhad. Building is under the control of Reena Berhad. And that is a result of past events. So the result of past event here normally refers to the date, right? That the asset is ready for its intended use. And the third one is that when we talk about asset, it is about economic resource, where economic resource is a right that gives the company potential to produce economic benefits. So you should recall the definition. So if that is not our answer, however, the answer is this. So you need to say yes or no. Yes. Yeah. Why? Because it has to fulfill these three elements or three criteria here. The building is an asset of Reena Berhad because. Give the reason. So you need to make decision to say yes or no. If any of these features or elements are not being fulfilled, any of it, therefore it is not an asset. It must fulfill all three. Must satisfy all three. So in our case, it is a present economic resources controlled by the entity. What do we mean by that? The building is decided by the company, and it is a decision of the company to use it as a place to sell their tableware. So that was to use as for the supply of goods, actually, right? They sell the tableware. They don't go and manufacture the tableware, but they sell tableware in the building. As a result of past event, what does it mean? They purchased the building that was on 30th of April 2017. So that was the past event. And the company has the right to use the building. That was the third part of the definition. Why? Because economic resource is a right. So that will result in an expected cash flow. So therefore, the cash that you would collect from the customer when they bought the tableware, that will have the potential to produce economic benefits when they walk in and buy from you. Therefore, that will give you some sales, and that sales will have to be, the effect is that it will increase the sale as well as increase the cash if that is cash sale. However, if it's on credit, at the end you'll be able to collect from that credit customer, and therefore still you have the potential to produce economic benefits, which is having an increase in income. So this one is relating to having increase in income. when we talk about having increase in income, right? Next, so this fulfill the definition of an asset. So you have to make decision. Next one. The next question is asking you on to explain whether or not the building is an item of PPE in accordance with Mfrs 116 property, plant and equipment. That is for 4 mark. So let's revise the definition of PPE a little bit. So if you can still recall, Mfrs 116 property, plant and equipment defines property, plant and equipment as follows. So there are actually 3 major things there, or major features or major characteristic in the definition. The first one is that it should be a tangible item. Second one is that they are held for these purposes, either for use in production, for supply of goods and service, use in production, use in production, for supply of goods and or services, right? Or, the word is or, for rental to others. If you don't use for production, it was used for rental, right? Recall that. Or for admin usage, admin purpose or maintenance purpose. And they are expected to be used during more than one reporting period, more than 1 year actually. So there are actually 3 parts in the definition. The feature is regarding the tangible item, number 1, and then the function of the asset, or how the asset is being used for, and the third one is the period of usage, or the period where the asset is being consumed or the asset is being used up. So that is not the answer, that was just a quick revision, right? This at the bottom here is the answer. So you have to decide again, yes, right? You need to answer yes or no. You need to mention why you say it is an item of PPE. Why? Give the reason. Remember point number 1 here. Number 1. So it is a tangible item. So if you say it is a tangible item, explain what is it made of. It is made of concrete. It is made of bricks, yeah, because it has physical substance, or you can also say it has physical form, right? Second one, look at the second part of the definition. Second part of the definition, whether any of these functions are being fulfilled. Not all, any of it. So here it was used to supply goods, which is this part. To supply goods. That is number 2. Yeah, number 1 is here. And the third one, the second one, the company used the building to sell tableware. So the tableware was not produced by the company. They buy and sell the tableware in their premise. And the third one, the third part, this one, right, is that it is expected to be used for more than 1 period. In our case, if you recall from the information given, it is expected to be used for 20 years. So the 3 parts of the definition has been all fulfilled. It must be more than 1 year. It has to be a tangible item, and it has to fulfill one of the function, any one of the function given here. There are 5 functions actually here, being this one is 1, 2, 3, 4, and 5. Right, so it has fulfilled the second function, which is supply of goods. Next, you are asked to calculate the initial cost of the building. So before we calculate the initial cost of the building, let's just make a little revision on the element of cost. Element of initial cost. Okay, if you can recall from the lecture, it shall include purchase price. Purchase price including, the word including means you need to add import duty. So add import duty plus, and non-refundable purchase tax. After deducting means to reduce that with trade discount and rebates. In our case, we have the purchase price and rebate. Next, look at the directly attributable costs that you have incurred to prepare or to bring the asset to purchase the building, right? You purchase from a third party maybe. To bring the asset is already at the right location, but it has to be prepared for the condition necessary to be capable of operating. So remember, it is used to actually display the tablewares, right? So it shall be capable of operating the manner as intended by the management. Next, it also should include by right the initial estimate of dismantling, removing, and restoring the item or the site to its at its present value. So let's see what does that has to do with our question. So in our case, the purchase price was given. We already made an analysis before. So at the purchase price, the rebate is 2% from the purchase price. So this will give you the net price. Then you are going to add the directly attributable cost. I put DAC here. So legal fees, stamp duties, and painting. We have already made decision earlier. So these are all being added. At the end, this is the total initial cost. Yeah, total initial cost that you incur on the date of initial recognition, right? On the date of initial recognition of building. That is for 5 marks. Okay, so that one is element number 1, the one here. And this one is element number 2. None of number 3 is applicable here. Next, you asked to calculate the carrying amount of the building, yeah, on 30th of June 2020. So before you calculate the carrying amount, let us make a revision on how do we arrive at a carrying amount. So if you can recall from the previous lecture or from other videos that you watched, the carrying amount is also known as carrying value. How do we arrive at that? Cost minus accumulated depreciation. So when we talk about cost minus accumulated depreciation, this is the depreciation that we are concerned to get the carrying amount. So if you provide depreciation each year, that will give you accumulated figure. That accumulated figure is what you call accumulated depreciation. Before you can calculate accumulated depreciation to arrive at the carrying amount, you need to calculate the depreciation. To calculate the depreciation, let us just extract some information from the question. So this was from the question. 5% is the rate. On cost tells you the straight line method. Yearly basis is the basis, yearly. And the expected useful life was 20 years. So these are the information given. So if you look our case here, the word on cost means straight line method, but be careful. On cost, when we provide depreciation on straight line method, on cost actually refers to depreciable cost. In your case, you also need to check what is the residual value, but there is no residual value. So therefore, the depreciable cost is the cost itself. Next, yearly basis. What do we mean by yearly basis? Yearly basis means full year depreciation is charged or is being calculated in the year of acquisition or in the year of purchase, regardless the month of purchase. Even though 1 month, even though 11 months or 6 months, you still will have to provide full year or 1 year depreciation, 12-month depreciation. So let's see the answer. Number 1 is already given because you calculated this much earlier. Remember, you calculate this when you calculate this is from your initial cost, right? This is from the calculation of your initial cost. So to calculate the depreciation, you are asked to calculate the depreciation on 30th of June. So on 30th of June, if you can still recall, this is using what basis? Yearly basis. So in June 2018, this is 1 year. Until June 2018, it starts from 1st of July. So I just put a little line here. So this is 30th June 18. This is 30th June 19, right? And this is 30th June 20. So these are 1, 2, 3 years. So you need to provide depreciation for 3 years, regardless when is the date of purchase. So remember, you don't purchase it on 1st of July, you purchase it on a later date, but somehow you provide full year depreciation even in the year of purchase. Remember, the year of purchase is 30th of June 18. So you provide depreciation regardless the purchase was less than a year in that year. So this is your year of purchase, just to recall, 30th June 2018. And then the carrying amount would be 3.199995 million, because you take the cost minus the accumulated depreciation for that 3 years, 2018, 2019, 2020. So be careful if you are asked to calculate depreciation or accumulated depreciation, right? So another issue that you can also ask yourself is that, can I make use of the estimated useful life to calculate my depreciation? So remember, you have the estimated useful life of 20 years here. You can see here, I'm highlighting that. And the answer is yes. So if you take 3764700, which is the initial cost, divided by the estimated useful life 20 years as given, and multiply by 3 years, which is from the date of acquisition until the year end 30th of June 2020, you get 564,705 as well. So both ways you will get the same answer. Either you use the estimated useful life as your calculation to get depreciation, or if you use the percentage, because when you talk about 5% per year, this one, yeah, by 20 years, you will have to provide full year depreciation. Why? Because 5 times 20 is 100%. So by 20 years, you will see that your assets are being fully used up. That was the expected usage. Okay, next question is asking you to explain the principles of revaluation in accordance with Mfrs 116 PPE. So according to the lecture that you have already watched and listened, I believe you can still remember, the standard prescribed that the PPE that has the so-called significant and volatile changes in its fair value may need some annual revaluation. So according to the standard, when the item of PPE is being revalued, the entire class of the PPE to which the assets belong shall be revalued. So not just one PPE, but the whole class of the PPE. If you're not just one building, but the whole or several other buildings must also be revalued, not just one particular building. If you talk about the class of PPE is the building. Next, you are not allowed to have selective revaluation. So if you were to revalue the building, you cannot simply pick up building A, building B without revaluing building C and D. So those 4 buildings, for example, must be revalued. So there are no so-called selective revaluation. Next, the fair value, the fair value or the market value of the building will be determined from the market appraisal made by the professional valuer. So it's not us accountants that make the revaluation, but the professional valuer that will assess the value or the fair value based on the market evidence. So these are undertaken by the professional valuer. So professional valuer will make the assessment. We are going to make the recognition of the revaluation. Next, you asked to advise management of Rina Berhad on the accounting treatment of the revaluation of the building. Remember the building that you purchased in 2018? Now they are being revalued. So if you recall, if you can still recall, how do you calculate surplus or deficit on revaluation? So you can either arrive at a surplus or at a deficit. How do you get that? If you compare the carrying amount with the fair value, and if the fair value is greater than the carrying amount, that will give you a surplus. If it's vice versa, meaning that if the fair value is less than the carrying amount, that will give rise to deficit, right? So in our case, the revaluation exercise has created a surplus. So if you look, the fair value was 6.2 million and the revaluation was done somewhere in 30th June 2000. We have to check the information, right? Look at the date of revaluation. So that was, if you can recall, let's just check on the information given for you to check. You can go back to the question and check where is it, so that you are sure with when is the date. So you can always refer your question to get the information. So this is what I'm doing. Just bear with me because I'm going backwards. Okay. So the revaluation was done on 30th of June 2020, which is the date of revaluation on the 30th of June, and this was 6.2 million, and therefore you have to compare this fair value with the carrying amount also on the date of revaluation, which is on 30th of June. That has already been calculated much earlier, if you notice. So let's just move to the question, which is going back to our calculation of surplus or deficit, right? We have already done this part. So now let's just go and check the calculation of surplus and deficit. So in our case, there is a surplus. Why? Because the fair value was 6.2. Fair value on the date of revaluation. On the date of revaluation, which is the 30th of June 20. You will also compare with the carrying amount also on the date of revaluation. You will compare on the date of revaluation took place, which is the 30th of June. You have already calculated much earlier the date. The information given earlier, we have already calculated the carrying amount from our previous question just now, and we have already calculated that. So if you compare fair value with the carrying amount, you will have a surplus. Why surplus? Because fair value is more than the carrying amount, so you have a surplus. Fair value is more than carrying amount. So there's a mistake here, so I just correct it. Should be carrying amount less than the fair value. So there is a surplus on revaluation. That is why. If you have vice versa, fair value less than carrying amount, then only there is a deficit. But in our case, please make correction. I've already made the correction here. It should be fair value greater than carrying amount. The issue is you are asked to advise the accounting treatment. So first advice would be the revaluation exercise, what it has created, the surplus, right? The working, you can also do the working by comparing fair value with the carrying amount. So here fair value, in our case fair value is greater than carrying amount. Then you need to mention the treatment of the surplus according to the Mfrs 116. It is being recognized in other comprehensive income in the SOPL and also being credited to the ARR. In the other comprehensive income, you will disclose it. In the ARR, you are going to record that under your statement of changes in equity. What is the carrying amount after revaluation? You need to also mention in your explanation of accounting treatment. So the carrying amount after revaluation, immediately after revaluation, which is on the date 30th of June 2020, the carrying amount will be the revalued amount. So they are going to be the deemed carrying value of the building. And where do we recognize that carrying amount? That has to be explained. Remember, these 4 boxes that you have here is explanation of the accounting treatment here. Explanation of accounting treatment, right? That is the accounting treatment for building. So that was the advice actually. So you recognize them in the soft P. So the revalued amount is being recognized in the soft P. Okay, that's it. Go and revise more. This is something for you to love, because this is the prospect that you are going further. Stay strong and be positive. Remember, we can get through this together. Just believe in yourself and you are already way ahead. Thank you for watching. I'll see you when I will see you. Assalamualaikum warahmatullah.